Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today's another episode of the Mortgage Guy podcast, and I wanted to hop in here because I do leave for vacation, so I wanted to give you a quick market update of what's going on out there. So it won't be too long, but one of the big things is Fed met, and as anticipated, rates didn't really move. We weren't really expecting a cut yet, mainly because the dollar is a little weaker right now. It's kind of getting to the lowest point it's been in a while. Gold and silver's really gone up a little bit. Could be a leading indicator of some inflationary issues. Obviously, all the numbers aren't out, so it depends on what the jobs market is going to look like. But so we're kind of flat, right? Fannie Mae, Freddie Mac still looking at a long 12-month projection of into the low fives by the end of the year. That has not changed. They haven't updated that projection. It's just a little too early. They're really leaning on a very, very strong spring market. Let's hope that's the case. Houses have been sitting a touch bit longer than usual. It's taking a little bit longer to get those offloaded. And it's just a mix of high price points. Rates are still right there where they, it's a lot better than where they've been, of course, being in the low sixes, upper fives, depending on your program and credit score. But some people are just still on the fence, kind of sitting back, waiting to see what happens. And so it's going to be interesting to see what happens in March, April in this spring market. So we might see a slight, a couple more price cuts in regards to the housing that's out there right now. I don't know. We'll kind of see. But, as we've talked to agents in this market and got their feedback, I really do believe if the house is right, good updates, price points, very competitive, those houses are still flying off the market. They really are. It's just got to be that right, perfect storm, location, fitting the needs of a lot of buyers at the same time, with the size and bed bath counts and quality and things like that. So at a very competitive price, and they're still flying. So that's still good news. Houses are moving. Some are sitting just a little bit longer than typical. But one big thing that's happened in the market, outside of rates not moving at all as anticipated this early in the year, is a couple lawsuits hit recently. One with Zillow, which I'm not going to talk about, but the other one, which could be a domino effect onto a lot of companies, is there was a lawsuit filed this past week with Rocket. And I'm going to read just a little bit. It's the same attorneys that took down NAR back in 2024. If you remember the whole concept of, sellers not wanting to pay a buyer's agent and all this fun stuff, and sellers felt like they were overcharged because they were paying a buyer's agent, even though it was already built into the listing agent commission. That whole bunch who's going after everybody in the industry because apparently their massive billion-dollar lawsuits wasn't enough. They're going to keep rolling. Well, and I don't disagree, and it puts me in an awkward position as the president of the Ohio Mortgage Bankers Association and talking about this. It is about a member, but it is public knowledge. And the reason I'm bringing this up is because of the domino effect it could happen or could have on other large companies. And so the firm has filed a suit similar to a steering class action suit against Zillow that's happened. All right, so this is kind of a one-offer, but again, domino effect. And they're going to go after the entire referral network model. That's where it comes into play, okay? So this is just an example. So Rocket brings in these pre-approval leads, because they are a massive marketing company. It's a tech-forward company, and that's how they get it. That's the brand name in mortgage. So Rocket then refers these potential borrowers to Rocket Homes Realtors. So as a realtor, you can sign up to get leads from Rocket. They'll send you customers that aren't already with a realtor, and they send them out to you. You will go out, show them houses as a real estate agent, and you're going to push them back to Rocket. That's their hope. And in exchange for those leads, once you close it, Rocket gets 35% referral fee from those agents. Okay, so the agents are steering them back because that's where the lead comes from, which is fair, right, from the realtor standpoint. But that in tune is a RESPA violation, right? They're requiring them to send them back in order to get a piece of their commission. They are getting a thing of value in return, and that's kind of what the lawsuit is founded on here, and causing some issues, right? And it's the same concept behind USAA doing the similar thing where they have realtors out in the market. They send business to listings, buyers, all that. But when they close, they get a big chunk of the commission. And it's always been a question mark, and I always wondered how it was legal. Again, gray area, I'm sure. My eyes, RESPA violation, and the attorney's eyes, definitely a RESPA violation as they're filing a class action suit. But the big thing with the class action isn't just the referral fee piece. Buyers were interviewed and said that they were in turn charged higher rates and costs to close that deal with Rocket after going through the referral program than what they could have got if they sought out Rocket on their own without being through that program. So that's where the lawsuit's coming into play with the buyers and how you get a class action. You get them together, you look at the market rates, the credit profiles, and say, all right, you went through this program, you got, example, 7% rate. Well, if you didn't go through that program, you could have got 6.75, whatever it is. I'm not sure what techniques, what methods they're using to determine this information, but that's another piece of the lawsuit is they felt buyers were getting charged higher rates by going through that specific referral program than if they weren't going through that specific referral program. And that's where it all comes down to, impacting the consumer. So that also is going to impact the USAA mortgage referral model, in my opinion. It's also going to impact Zillow's new referral model, which I'm not going to get into today. I'm sure that's going to be a very, very long topic for a different day, but definitely something that we need to keep our eyes on. And agents, if you are watching this, you may know what I'm talking about. It's not just purchasing leads from Zillow when they click. There's a new program out there that is very similar to what Rocket is doing, very similar to what USAA is doing. So it'll be interesting to see how this goes, because if these attorneys are successful against Rocket, there's no holding them back at that point. The precedence has been set. This whole model is going to go away, or you're going to pay dearly for it. And that's really all I got for you this week, other than an announcement, guys. So if you're a loan officer, if you work in the mortgage industry, if you're working in an industry that is related to the mortgage industry, insurance, mortgage insurance, what have you, appraisals, title work, anything like that, we do have our Future Leaders program that is going to be starting on March 3rd, and we have some very, very high-end speakers, very powerful CEOs, owners in the mortgage industry in this space. We also have 3 keynotes, which will be the head of the mortgage division for Fifth Third, Jay Plum. We also have Sue Woodard with the Strathmore Group, who is in charge of the customer experience in the mortgage industry for their group. And we also have Jody Hall, who is the head of the Mortgage Collaborative, and fantastic speakers, very, very knowledgeable in the industry. But that's not all we have, right? The curriculum is spread out over 4 days, and we're doing March 3rd and March 4th, which is all Zoom calls, and it starts around 8:30 in the morning, and you end just after lunch, and everything's broken out between 30 and 45-minute segments with all different topics going throughout those days. And then the following week, we're going to do Tuesday the 10th, and then on Wednesday the 11th, the final day of the class, we will all be meeting at the State House. We have our day at the Capitol where we're going to be meeting our legislators, our congressmen, our senators for the State House, talking to them about some of the issues that are going on in today's world, mortgage industry related, home ownership related, and what's happening, giving them some solutions to some of those issues, and kind of just seeing what their positions are on the topic, and pushing that agenda forward to make sure that we have a very good and ethical lending environment, and we are protecting our consumers, our taxpayers, homeowners, everybody in the state of Ohio. So I hope you can all join us. If you have some questions, do comment on the video. Drop a comment into the TikToks, wherever you're at. I'd be happy to get you the contact information on how to sign up for the class if you're interested. And that way we can have a fantastic 2026 graduating class at the OMBA conference in June. But that's all I got for you this week, guys. I'm going to be out for a week, not going anywhere too sunny. It's going to be cold, but family trip. It's a must-go trip. Can't miss it. So we'll catch you when we get back, guys. Remember, subscribe on YouTube. Check us out on Spotify and Apple Podcasts. We'll catch you all.